Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day today. Trading today, market is up actually quite a bit today. We got 1.3% on the S&P today. At one point, it was close to 1.5%, but we did see a big surge on the small caps. And on the Dow, I think Dow had about 2% gain today. The Nasdaq, I think Nasdaq underperformed today. It's not really surprising because they've been really leading the entire market first, and now they're taking some rest while some of these lagging indices to catch up, which we've been talking about, right? Which we've been covering that I'm anticipating some of these lagging indices to catch up. And so I think the banks are up about 4% today, and that's a huge move. 4% on a single day is a big move. And we have Russell 2000, I think, close to about, 2.3% on the Russell 2000. I believe Dow is, 2% on the Dow. But it was the banks that really did really well. But 3.73%, but it was close to 4% at one point. And you can see the banks' performance up here. Goldman Sachs at 3, JP Morgan at 5.4, Morgan Stanley at about 3%, Citigroup 5% there, Bank of America close to 5. So it was a huge day for the banks, and it's always good to see. When you're looking for the stocks, the market to recover, you're gonna start to see the banks showing some strength, and that's kind of what we've been seeing here last couple of weeks, right? That the banks are going to see some strength while these large tech companies start to lag. So I want to look at Qs. So Qs, you can see 0.45%. So you can see Qs pretty much stayed flat throughout the day, as you can see, while some of these other sectors has done really, really well here. So let's talk about that. I actually, let's first kind of talk about the candles first. So this was a first hour gap up. We talked about gap up yesterday, and this was 0.68%. It wasn't like 1.5% gap up. So the reason why I talked about 1.5% gap up yesterday is because now that we saw a gap up to 310, and so we did see a nice rally to the upside. But you can see the gap has been filled, right? So that's the resistance. Not only there was a resistance in the prior, but that was that gap level. That was a reason why we saw end of the day sell-off. Not really a sell-off, but a little pullback. We didn't close the day in a strong manner. Not like yesterday. You see yesterday we closed strong, right? There's not even a little tiny bit of wick here. And then we saw gap up today because after the strong close yesterday, we saw continuation to the upside with the gap up today, which we've been talking about yesterday, right? And then you can see we continue to move higher, but towards the end of the day, that wick there does not look like yesterday's candle, right? It's because we've been talking about this oscillator, right? Remember this? So last time when I told you guys that when these oscillators are cultivating higher lows, that's when the market gets into a second gear. And we surely saw that ever since we saw that the second higher low and third higher low. You see how much faster the move has been. We have not seen that kind of move in a while now, especially a follow through, because remember it's been a very, very choppy move. And it seems like there was a lot of up and down, gap down, gap. We really didn't see much of a follow through pretty much last couple months. But ever since this time right here, I think a lot of bears were expecting that head and shoulder formation to play out. But we talked about how we want to continue to give benefit of doubt to the buyers because that was the gap area support and also my longer term moving average, right? And that was when we saw the oscillator right at that oversold level. And the performance from that is quite a bit. That's a 13% run in just about 2 weeks. So market definitely got into a second gear, and we saw that happening on this oscillator, right? We talked about how we never, because even before when we did see the oscillator, going back and forth in the middle of the band, we didn't see higher lows. We actually saw lower highs and lower lows. This is a first time now since the March lows we're witnessing that higher lows there. And with that, bulls were preparing for some big run. So we saw a gap up, but it wasn't a big enough gap to gap above 313. So because of that, gap got filled and we're at that resistance, which is 313. 313, 312 is the resistance. Not only that's the resistance level, bulls just filled that down gap, and that's short-term bearish, right? Bulls have been filling a lot of these gaps here, and when the gap gets filled, it usually acts as resistance. Not only that, bulls are now getting tired. Bulls are finally getting tired. I mean, they really utilized that well, the energy they had left from yesterday. Because if you watched my last night's daily update video, we talked about how bulls have just a little bit of energy, right? And they want to maximize that by gapping it up. They did gap up to 310, and then they made it another push to 313. And that's as much as bulls can able to do with the little bit of energy they had left after bringing this thing up since late May. That has been such a great run. But now you can see we are getting into that overbought territory. So what can we expect going into tomorrow? Tomorrow's Thursday? Tomorrow's Thursday. And then we got 2 more days for this week. So there are a couple things can happen. Actually, there's 3 things can happen, right? And so first thing is, even though the market or the bulls are tired, it is a lower probability outcome. Even though bulls are tired, at this point, almost every single market participants are saying that this thing is overbought. This thing is overbought. It has to pull back. And it is overbought. Market did see a phenomenal run. 13% run in about 2 weeks on the S&P 500. So that's what most market participants are thinking right now, is that this thing is overbought. There's no way it can keep going higher. It must pull back. Sometimes when most people thinking the certain thing, market is really good at doing something different. It is lower probability. It's a possibility we may see another gap up and another pop. And what's going to happen if we do see a pop tomorrow or Friday, oscillator could kind of grind lower like this, while the price spikes up just a little bit and then builds some kind of bearish divergence. And that could make the price go even a little bit higher, maybe even 317, 316, 315, right? Market is just so that market can wipe out just a little bit of remaining bears. Because right now, again, everybody is thinking that this market is overbought, right? Maybe a lot of people even trying to short this, and market don't like that. When most participants think certain way, market love to do the opposite. So there's one way would be this thing popping up again, maybe even a little bit of gap up tomorrow, and then grinding all day. While it gaps up, grind all day tomorrow, this oscillator could continue lower while the price kind of stays sideways after the gap up after a little up move, and then form some kind of bearish divergence before this thing finally come back down to possibly retest that, and that and then we'll have to re-examine at that point. The second scenario obviously would be then we open flat, slight gap down or something like that, and then just hang around, in this vicinity. That is the micro term support right now. Remember, we've been talking about micro term support yesterday. That's a micro term support. That's a prior resistance support. So we may, here, let's put this one here. Let's put that there. So we got the micro term support at 311.97 and 311. So 311.30 and 311.30 and 311.90s, right? And we may trade around it here throughout the day, right? Kind of consolidating. And then obviously while that happens, the oscillator is going to start to slowly curl back down to form some kind of a bearish divergence again, right? We got higher highs, and then divergence kind of that oscillator start pulling back. Another scenario would be then just seeing kind of a heavier sell-up that we haven't seen in a while, maybe coming all the way back down, maybe seeing a candle like this tomorrow, and then coming right back down to retest 310. When that happens, you're going to see this oscillator coming right back down to that rising pivot. More like a rising support on this oscillator. So I think the first scenario, it will be more rare, but it may happen because of right now, everybody's thinking that this is way too overbought. More likely scenario, I think, is the second one, where we could still grind sideways, maybe a little pop here and there, but up and down, kind of grinding here, maybe consolidating or something like that, right? For a day or so, and then letting this oscillator kind of pull back, and then we'll have to come back to re-examine the situation. I think we have a higher probability of that happening. And then another rare side would be just seeing downright bearish downturn, and this thing kind of coming hard to come to 310. And I think just coming down to 310 from here is not, that's not a lot. It's about 0.6%. So 0.6% pullback is very likely, actually. It's not a whole lot of move. Coming back down, seeing about 0.6% decline tomorrow to retest 310. It's feasible. It's something that could potentially happen. So those are the things that I'm thinking about. Obviously, I wouldn't call this as a top where, now the market is ready to plunge and going back to, March lows. That's not going to happen. So we're going to take it day by day. Bulls are tired, right? Bulls are tired, but there's a lot of momentum. You just because market is overbought condition, you can't just expect the market to completely tank, right? There will be a lot of supports that bears have to fight through before this market is going to see something like that. So we want to continue to give benefit of the doubt to the buyers. My short-term, one of the things is that my short-term moving average has not been tested. That short-term moving average, it used to frequently get tested here, about a couple days later it got tested, a couple days later it got tested. Ever since May 29th, in about 2 weeks, we have not seen that moving average, we have not seen it getting tested. It's no coincidence, it's not a mistake that is hanging around just at that gap fill area, because if the gap gets filled at 308, it's going to provide strong support. Remember, we have to be fair. This gap over there just got filled, that down gap. That's where we are at currently. That's the resistance. If bears bring it down all the way to 308, it's going to be pretty strong support in the short term, because now the gap just got filled and we have the short-term moving average residing in that vicinity. Remember, the short-term moving average does have a pretty impressive resume, because every time when we saw that, short-term moving average, that's the setting there, when that gets tested, we saw upside move when that gets tested. So let's continue to give benefit of the doubt to the buyers while understanding that we are overbought, but we still cannot rule out the fact that bear bulls can still try to push just a little bit more, just squeeze, remain their bears out before that thing actually seeing some meaningful pullback. So we'll come back tomorrow after the close and we'll re-examine the situation. We'll go from there, right? You guys have a wonderful evening and good luck trading tomorrow.